New York City. I'm back in the financial capital of the world as we're continuing to see global financial markets struggle. Right now, we've seen crypto, stock market continue to reach multi-month lows, but the good news is that there is an end in sight, and there are 3 or 4 reports coming out over the next month that we need to be aware of as investors because it can help us predict where the market is going and can help us make some more money. So right now, what we're seeing is that new CPI data is coming out in the next few days on October 13th, 2022 at 8:30 a.m. Eastern Time. The good news with this report is that it'll show us what the Federal Reserve has been doing with interest rates, if that has actually been working. We've seen the Federal Reserve has continued to raise interest rates every single meeting for the last 3 consecutive meetings. They've raised it by 75 basis points. So now with the CPI data, we would like to see inflation continuing to drop. Last report in the month of August, it showed 8.3% year-over-year inflation. So we definitely need to see below that number. But according to estimates, it's supposed to come in at 8.1%. That's according to Bloomberg and many of the top analysts. But what we're seeing is that we would like to see as investors anything below 8.1%. That would be very bullish sign for markets, potentially showing a flip in the Federal Reserve's policies, and that could show us that instead of continuing to raise rates by 75, 100 basis points, they could potentially stop, maybe even level off, and eventually we will see a decrease. That's not going to be for a while, but at least we could see an end to all of these massive rate hikes. Again, this probably won't happen this meeting, but ideally we would like to see any number below 8.1%, showing that the economy is finally reacting the way it should, finally starting to see inflation come back down after months of the Federal Reserve raising rates. I want to quickly interrupt today's video to bring you a word from our channel partner, Decentralized Foundation. Decentralized Foundation, DeFo, is a DeFi protocol on the Avalanche network that aims to leverage the world of DeFi to allow you to earn more and donate more. It does this by curating, managing, and maximizing your DeFi earnings to give it back to those in need. By buying their NFTs, you get weekly rewards in DeFo tokens, and this can then be either sold or locked in their vault, giving you access to yield farming profits of the protocol. The cool thing about DeFo, in my opinion, is that their main focus is on long-term sustainability. They've opted for a viable business model with more modest returns versus typical protocols which promise extremely high returns but inevitably collapse because they can't do that long-term, and we've already seen this happen multiple times already over the last 12 months. This platform is definitely worth checking out, in my opinion, if you're interested in profiting from the crypto market long-term and interested in DeFi. Use my link in the description and check out Decentralized Foundation today. And let's get back to the program. But not everyone is as optimistic, because what we've seen is that JP Morgan and Chase CEO, Jamie Dimon, he came out and says that he expects the U.S. to tip into a recession over the next 6 to 9 months. He says by the middle of 2023, he is expecting the U.S. to be in a pretty severe recession. He says this is because, among all of the indicators he is seeing right now, that there's been runaway inflation, which I said, new reports coming out, we'd like to see, slowly dropping. But he says some of the indicators have been runaway inflation, interest rates going up, the unknown effects of quantitative easing, and Russia's war in Ukraine. So ultimately, if we could see this report come out for CPI data show some positive news, it could help with the U.S. going into recession. But if not, JP Morgan and Chase CEO Jamie Dimon says he's expecting it. He says things right now are very, very serious and could potentially push us into a recession. Might have been too late already. He says this could have been avoidable if the Federal Reserve acted sooner, but where we are right now, we just have to wait and see, according to the next few reports, what the data is showing. So we'll keep an eye on that. But he says definitely is going to put the U.S. in some kind of recession over the next 6 to 9 months, just because we are going to see slower job growth. We are going to see potentially unemployment rise. So those are things to keep an eye out on. Next thing that we've seen is that the Fed Chicago Fed's president, Charles Evans, he came out and says that right now fighting inflation is the top priority, even if it means job losses. And that is what will push us into potentially a recession, is all of these job losses. If we see unemployment continue to increase, even if it means good news for markets, it's going to push us into a recession. And according to Federal Reserve Chicago President Charles Evans, he says that holding back inflation, bringing it down, is the number one priority. So what does that mean? That means they're going to continue to raise rates as much as they need to bring it down, even if people lose their jobs. And this isn't really going to be good in the short term. It's going to be more pain in the short term. The long term, this could be a very good thing, he says, for the future of the economy, future of markets, because he says price stability makes the future better. That is why they need to bring these rates and inflation. They need to bring them down. So we'll see what happens there. Last thing I want to go over is going to be with the upcoming Fed meeting. So we talked about how CPI data comes out in October 13th, 2022. This is going to show us if what the Federal Reserve has been doing is actually working. And ideally, we like to see it come in below 8.1%. But after that, we're going to see on November 1st and November 2nd what the Federal Reserve is going to do. Right now, everyone is expecting a 75 basis point rate hike. So anything below that would cause markets to just jump massively. Anything above that would cause markets to fall. Keep an eye out on both these reports, the October 13th report, which is CPI data, and on the November 1st and November 2nd meeting with the Federal Reserve, which is going to be when they announce the rate hikes. So keep an eye out on both of those meetings. But remember, below 8.1% for CPI data is going to be very bullish for markets. Above it, very bearish. For Federal Reserve, anything below a 75 basis point rate hike in their November meeting is going to be very bullish for markets, and anything above 75 basis points is going to be very negative. Ultimately, that's what's going on. Hope you enjoyed, and I'll see you guys in the next episode. See ya.